Good day, ladies and gentlemen, and welcome to the show on this Wednesday, the 8th of June, 2022. Thank you for tuning in. I'm glad to have you guys here. And welcome to all the new viewers for Patreon, the new Patreon members. You're really helping to support my channel, and I appreciate that. Let's get started. Let's open up the charts right here. Take a look. Yellen says inflation to stay high. Biden likely to up forecast. You know, I'm going to tell you guys what. Inflation is a product of an overprinting of the currency. It's also a product of people losing faith in the purchasing power of the currency. But in the right conditions, inflation can evaporate so quick. And you say, well, what are those conditions? Well, if people don't have any money to buy anything. If people can't afford to buy anything out there, retailers will have to lower prices. It's just as simple as that. And I'm going to tell you what, take a look at what's happened in the past number of months, in the past couple of years, actually, in the COVID crisis. They were pumping money out there like it was going out of style, sending checks to everybody out in the country, just printing them off. Stimmy checks. Do you remember those stimmy checks? Also, unemployment insurance. They were sending people like $500 every Ipswich. They were sending all kinds of money out there. You know, I think what was it they were sending people like for if they lost their jobs and stuff? It paid not to work, actually, for a while there, you know. And what was the results of all that money that flowed out? People didn't need to work and stuff, and the stock market was going up. People were going on, and they were making money in the stock market. They were making money with Bitcoin. They were making money. All kinds of money was flowing every which way. And an awful lot of people, you know, you could have trouble finding work. I mean, for places, employers are putting signs out that says "Help wanted." We need help. You go to all the lower price jobs down near minimum wage. You had help wanted signs everywhere, and there's nobody to do those jobs. So you go to a place like Burger King or whatever, and a little sign says we're closed today. We don't have anybody to work. You know, and that's the period we went through. Now what's happened is they've cut all that off. All those sources of money that were flowing out there, they've cut them off for a while now. They've been cut off. And the people that were into that money pool, you know, that were getting money from maybe their, from betting on I say betting on the stock market because that's what it is nowadays. They're not getting that, and the cryptocurrencies has been dropping, and no more stimmy checks and anything, and it's taken a while. Took a few months, but the money started to run out. Okay? So what happened next? Well, they hit their credit cards. That was a month or two ago. They started to hit their credit cards, and the people have been living off their credit cards for the last month or two. An awful lot of people, the consumer out there. So then we had the downturn in the stock market that we've just had, right? And now it's stabilized. I told you guys it would stabilize. So what's going to happen next? Well, next what we're going to see is all these extra jobs out there and stuff. Because the people are out of money now, a lot of them are going to start looking for a job and going back to work. And they're going to suck up all these excess jobs, help wanted jobs, you know, even the jobs where you're near minimum wage type jobs are going to start to disappear from the economy. You say, well, that's great. We got more people in the workforce. As these jobs and the layoffs are going to start coming too, right? But what's going to happen next in the markets you're interested in? Well, we're headed now for a downturn, and I'm not going to call it a crash. You know, these guys out there saying, okay, we're going to have a 60%, 70%, 80% crash. That cannot be allowed to happen. It would happen, but the central bank will not let it happen. So they're going to have a downturn in the markets. It's going to be quite a severe downturn. I'm expecting the Dow to go down might even go below 25,000 in this downturn that's coming in. And this is immediately ahead, this downturn. What that's going to lead to is the Fed changing direction. All this tight talk about, but you got to understand that the way things work is they take action, and then you have momentum in the system that lasts for a few months. And this is what's happening with the inflation right now. This is momentum from all that money printing that they did. Well, I'm not going to call it money printing. They don't actually print it. But all that money creation, all those stimmy checks and all that stuff, the inflation we're seeing now is a direct result of that. But like I say, it takes a few months to peak, and there's a curve there. Okay? Now what they're doing is they're cutting, but they still have the momentum from the inflation. That momentum is going to start to slow, and that's called disinflation. As this progresses, and as the markets fall, start to go into this precipitous downturn that I'm talking about, right? We're also going to see the system start to move toward disinflation and toward deflation. So when they start this turn back up again, because things get too rough for them, the Fed, then what we're going to see is all hell break loose, because we're going to still have that momentum of disinflation moving in that's being created right now. See, it doesn't show up for a few months, the effect. Then when they start to raise things again, the inflation's going to roar back again. It's almost a similar effect to, I don't know if any of you guys have been through a chimney fire. I've been through a chimney fire, you know. And I'm going to tell you guys what. When you're trying to put a chimney fire out, you dampen it all off, and maybe you spray, this is in the old-fashioned chimneys, the brick chimneys. And you spray a fire extinguisher in the base of the chimney, and you shut all the chimney up. Okay? And it sucks that fire extinguisher up inside the chimney, and it tries to put it out. And it's not getting air. That's what they're doing right now. Right? But when you if you prematurely open that door up at the base of the chimney, you'll hear the air roaring in, and it'll sound like a jet engine taking off inside there. In fact, it is how a pulse jet engine works. It's the same way. But the chimney acts like a pulse. It acts like a jet. And it'll grab that air, and it'll reignite again. And that's what we're dealing with here with the inflation thing. Is what they're doing right now is going to have the effect of dampening it. It's dampening it really fast. Really fast. It's dampening it. Faster than they think. In fact, we're in a crash. The crash is continuing right now. But not in the market so much. Now it's continuing in the general economy. People are just running out of money and not going to be able to buy things. The only things they're going to be able to buy is things like things they're forced to buy. Say they got to drive to work, so they're forced to buy gas, so they have to buy gas. Gas prices will continue to rise. People want to travel on trips and stuff in the summertime, so they're forced to buy gas. If they want to go someplace, any place, they're going to have to buy gas. So they're forced to. They're forced to buy food. They can't go hungry. They're forced to buy food, so food prices will continue to rise. But the consumer is tapped out. They've tapped out their credit cards in the last month or two. They're not getting any more stimmy checks. They're tapped out, the consumer. And so we're going to see consumer purchases of mundane items falling off a cliff. And we're going to see prices start to probably drop on some things. Things that are not necessities. Things like, I don't know, you might go into Target or something, or Walmart, and they might have sales on a lot of their merchandise. It's not necessary things. Things like too many ice coolers or whatever. You see a big sale on ice coolers. Because people don't have to have an ice cooler. But people have to go to the grocery store. You're going to still continue to see prices rising on especially things like meat, vegetables, anything you need in the grocery store. Prices will continue to rise. Same with gas. I think gas is going to be going up to like 150 or higher per barrel, and that's going to translate into the price at the pump being probably a third higher than it is now, if it's not already high enough. So the consumers tapped out, and here they come, and they're going to create now a downturn in all the markets. They're heading us into a depression, but it's not a depression like in the 1930s, which was a deflationary depression. This is going to be a hyperinflationary depression, because when the Fed turns, and when I said all hell's going to break loose, that's because when the Fed changes direction and they go back to a more stimulative monetary policy, heck, they might even go back to quantitative easing and end the quantitative tightening program or put it on hold. They might stop raising rates at a certain point. I can't see them getting past 2 or 3 more rate hikes, especially with this downturn coming. Before the end of the year, I think they're going to have changed direction again. This is just going to complicate things. Because then, at that point, we're going to see the markets turn around, things turn around again, but they will have went too far, and they will have put us into a very deep, dark recession, but I'm actually going to call it a depression. It's a perfect setting for them to bring out their central bank digital currency at that point in time. Anyway, let's move on. Take a look at the silver price today at $21.98. It's down 24 cents. And gold today, come on, switch the charts for me. I'm going to have to move on if this thing doesn't hurry up. We're going to move on. Take a look at cryptocurrency today. $30,704 on the day for cryptocurrency, for Bitcoin. So it's been hovering around that $30,000 mark. A little bit below it one day and a little bit above it the next day. It's really been hanging out there, you know. Let's see if we got gold yet. There we go. 1852. It's up 50 cents on the day so far, which is practically nothing. Dow Jones Industrial Average, it's down 66 points. We're getting ready for this big downturn in the markets that's going to come very, very soon, probably within the next 90 days. Get ready for it. And it's going to appear like a crash, and in fact, it is a crash. It is a crash that would take the markets down by probably 80% if it wasn't checked or stopped. Of course, they can't allow that. But we are going to see a drop in the markets. Probably the Dow Jones will probably they'll probably end it when it starts to. They're going to be very nervous once it drops below 30,000, and they'll get extremely nervous and upset as it drops into the upper 20s. But they're probably not going to react until it starts to get down around 26, 27,000 on the Dow. And we're at 33,000 right now. Crude oil, $120. It's up 93 cents today. And look for this to slowly meander its way up toward 150 from where it is now at 120. But I think it's going to peak at a certain point. There's going to be a peak to this, because the best way to solve low oil prices is high oil prices, and the best way to solve high oil prices is low oil prices. Because what happens is well, you know, aren't they restricting drilling and stuff? I just don't know what's going on with that. Anyway, let's take a look now at the move index. 102.61. It's still staying down. This is still green light for the Fed to continue on. Bonds and rates today, what we're looking at is falling yields, no, rising yields, I should say. 3.02 on the US 10-year and 3.17 on the 30-year. And to finish off with the dollar index at 102.28 today. So there you go. Basically, what's going to happen is we're in for a downturn. Uh, we're going to see it reverse, so it's hard to get a job out there pretty soon. Right? I know it's been terribly easy, especially a low-paying job. To get a low-paying job, you could have 5 in one day right now, the way it is. But it's going to all change. Even the low-paying jobs are going to be hard to get as people get desperate because they're not getting any relief. They're going to need money. They're going to take up all those jobs again. And we're going to see a depression, a hyperinflationary depression, because they just can't stop printing. And a hyperinflationary depression is the worst kind of depression. It just kills savers. It'll destroy savers. It'll destroy people on fixed income. And it won't even keep up with the people who are working out there. Salaries won't keep up with it. The price of inflation, ultimately. And that's where we're headed. Down the road, after the Fed changes direction. But that's when we're going to see the price of silver and gold and cryptos go to the moon. Listen, guys, don't disparage cryptos. Things like Bitcoin and stuff. They're going to be massive in the future. Massive. You know, and your gold and silver is going to be massive too. All three of those, gold, silver, and cryptos, are going to be massive in the future. And so all this talk about Bitcoin's going to do this and Bitcoin's going to disappear and Bitcoin's going to die and all this, all baloney. Ultimately, in the future, crypto is going to be big, bigger than you could ever imagine, and gold and silver too. And I know gold and silver's been having a rough time because these bullion banks keep suppressing the price through paper short contracts, which is basically a derivatives product. But this will come to an end. And all of it, I think, is going to come to an end when the Fed changes direction on what they're doing right now. This is the last hurrah. And it ain't going to last that much longer because the downturn's getting ready to start. And it's a downturn that's going to force them to change direction. And it's all coming to an end pretty soon. And you got to be ready for all this because there's food shortages coming and they're going to be absolutely massive. And I'm not exactly sure how bad it's going to get in the developed countries like United States and here in Canada and the United Kingdom and stuff. I'm not sure how bad it's going to get. It might get pretty bad. It might surprise you how bad it gets. We might all have to go hungry. I mean, maybe we won't starve to death, but you might want that little bit extra chubbiness you got on you. You know, you might need that. It might get really bad. You might be surprised because crops are failing around the world. There's no fertilizer, and food insecurity is coming in a big way. And so is the stampede with the people at a certain point when they get hungry enough. Look out. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.